Almost every trader who gets into scalping has worked with EMA strategies at least once, but the main question is, can a simple combination like EMA 9, 21, and 34 on a 1-minute time frame really be profitable? Or is it just another one of those strategies that looks nice on the chart but fails in the real market? To find the answer to this question, I backtested this strategy 100 times, without changing the rules, without selecting only good trades, and without eliminating losses. First, let's open the GBP/USD chart. Let's go faster. Now, to make the test result fair, I specified the rules before starting the 100 trades. No trades were selected based on emotions. No losing trades were eliminated, and only trades that exactly followed the rules of this system were considered. To reduce false signals, we didn't just rely on EMA crosses. To enter a long, several conditions must be met. First, the EMA 9 must be above the EMA 21 and EMA 34 to indicate short-term bullish momentum. Second, the price must consolidate above the EMA 34, as we don't want to enter in the middle of a weak move. Third, we wait for confirmation from the price itself, such as a strong bullish candle closing above the EMAs. When these three conditions are met, we enter a long trade. To sell short, it's the exact opposite. The EMA 9 must be below the EMA 21 and EMA 34. The price must be below the EMA 34. And we wait for a strong bearish candle closing below the EMAs. To make this back test more realistic, I didn't just focus on one specific chart and tested the strategy conditions on several symbols. One of the symbols I tested was EUR/USD. The reason I chose this currency pair is that it has high liquidity and usually has a good spread for short-term trading. In this test, I entered a buy trade when the entry conditions were met, namely EMA 9 was above EMA 21 and EMA 34, price was above EMA 34, and a strong bullish candlestick confirmed the entry. After the EMAs converged and a strong confirmation candlestick formed, the entry was made and the subsequent price movement was monitored. For sell trades, I followed exactly the same rules in reverse. First, EMA 9 had to be below EMA 21 and EMA 34. This indicates that the short-term market strength has shifted toward the sellers. Second, the price should consolidate below the EMA 34. Since we do not want to enter the short position in the middle of a small correction, we are looking for a move that has shown its downtrend. Third, we wait for the candlestick to confirm. The short entry is made. We place the stop loss above the last resistance zone or the last short-term high. And the goal of the trade is to reach the price at a certain risk-reward ratio or exit when there is a sign of a trend reversal. Now let's look at another example on the NASDAQ, or NAS 100. The NASDAQ is one of the symbols that is popular with scalpers, as it usually has fast and clear moves. In this example, we were waiting for a short position. First, the EMA 9 started moving below the EMA 21 and EMA 34. This was the first sign that the short-term market strength was shifting towards the sellers. After that, the price fell below EMA 34 and managed to consolidate below this range. But we did not enter the trade yet. We waited for confirmation. A few candles later, a strong bearish candle formed, which closed below the EMAs. This was what we needed to enter. After entering, the important thing is not to let emotions decide. The stop loss and take profit limits are predetermined, and we proceed only according to the rules of the system. This is exactly what we checked in the 100 trade back test. Not to pick a specific trade and say that the strategy is perfect, but to check all positions with a fixed rule. Ultimately, a trader's edge is not built on finding a perfect strategy, but on the consistent execution of a tested system with professional risk management. The market rewards those who have a system, not those who just follow signals. I want to show you a trade. Unfortunately, I had work. I couldn't show you this trade. I saw it yesterday. I said I would enter, but I couldn't enter. But this trade hit TP1. This was the same strategy with reversal. To take a buy position, long, we only enter when all of these conditions are met. EMA 9 is above EMA 21 and EMA 34. That means the short-term momentum is bullish. The price is above EMA 34. To make sure we don't enter in the opposite direction of the trend, the RSI is above 50. This shows that buyers have more power than sellers. A bullish confirmation candle is formed and closes above the EMAs. And for look at sell, for selling short, EMA 9 is below EMA 21 and EMA 34. The RSI is below 50. A strong bearish candlestick forms and closes below the EMAs. After this condition, we enter a sell trade. This change has a big advantage. The EMA cross gives a lot of false signals in a ranging market, but the RSI helps us to understand whether there is really power behind the move or not. We can apply this same approach to Fibonacci confirmation to achieve good profits. Focus on the key levels of 0.5 and 0.618. When the price approaches these levels and provides a signal, we can enter the trade. However, the confirmation needs to be robust. Avoid arbitrary entries. So ensure the confirmation candle aligns with the Fibonacci signal to guarantee a reliable setup. But we can say EMA 92134 plus R SI filter scalping strategy, and the audience feels like we are testing a more complete system. I think this version is better for a 100 trade backtest. But there was one problem. The EMA 9/21/34 strategy sometimes gave very good signals, but in a ranging market it gave several false signals. So a question arose, can adding a filter like RSI eliminate these weak trades? So I decided to test the same strategy again, this time with the help of RSI. Let's see if the result really improves or not. We don't say that the strategy is great just because one good trade happened. Our goal with backtesting is to see if these rules actually work in a large number of trades. Well, after testing this strategy on several different situations, one thing became clear. EMA 9, 21 and 34 is not a magic system that will win in every situation. The most important thing is to have clear rules, manage risk, and test the system before using it with real money. If you like this type of back tests and reviews of real strategies, be sure to follow the channel, because in the next videos we will test other popular strategies to see which ones are really worth using. If you have any suggestions for the next strategy, write in the comments. Until the next video, good luck and always test before taking risks.